I don't think any of us were in this trade, but it's been a pretty popular trade on Twitter among a lot of people that trade the can slim or growth and momentum style. I saw a lot of people talking about it, and this was a trade that a number of people were saying that this was acting like a leader. And so I wanted to bring this one up because whether we're in it or not in it, it's important to have plans for this potential outcome. Like that, this is a rare event. Hopefully, it's a rare event. Hopefully, you don't experience it, but we need to be ready for if and when it does happen to us. So, I wanted to give you some of the ways that I prepare for this, and wanted to get your thoughts on how you prepare for it, or any thoughts or comments along the way. So, the first thing, the first level of preparation for a move like this, I actually think it starts from when we run our first scans, right? Like in essence, it goes back to our trading systems, and are our systems robust enough to handle a trade like this? And so for me, first I saw this name CRDO, and people are talking about it like it's a leader, and so many of the large can slim guys talking about the stock like it is a leader. And it's like, well, why didn't this one pop on my scans? It was a recent IPO. Perhaps it didn't pass because it was the comp rating. Maybe it had something to do with the group rank. It seems like it has plenty of volume behind it. So not sure why it didn't pass the scans for those reasons, but in either case, never passed any of the scans. So that would be the first level of defense. Does it pass your screening process? And if it doesn't, then it wouldn't be on your radar to begin with. So one of the things that happens so frequently in trading is that you could go on social media, go onto a blog, go wherever, and you see somebody talking up a trade. And if that's not a part of something that you've screened for, or what have you, then that would be one way to filter out some trades, right? To help filter out the noise there. After that, the next step in it comes from defining the setup, right? So, is this a high quality setup, or how would you see this? The way that I'm seeing this, I actually see a couple of different spots where a trade could have been entered, but so far the setup here, I would see this maybe as an IPO, this whole thing as an IPO setup, where it's starting to look like a VCP, like this, with an entry point right here. Right, so what's that high? $15.19. So let's oh, I dropped it right on the mark. Isn't that nice? So right there, and then let's see. If we had entered at, say, $15 and 26 cents or 25 cents isn't bad, then have a stop. Let's put it right below this low right here. So that's 1383. So let's say 1380 to start. What would that have given us? that would have been a 9% stop if we were putting it there, 9.5%. So for me, that would have disqualified it for me. That's a little bit too wide. But let's say we decided to say, you know what? Let's use this low right there. Well, what's that low? That low is 1437. So let's put the stop at 1430. 1430. That's 6%, right? For me, that would be doable. On that day, well, even at 1430, I wouldn't have the 10 EMA, right? Because if I'm looking at placing the order in the evening of January 20th, Friday, January 20th, or actually starting on Monday, right? Because it would have executed on that Monday. I would have been looking at where the 10 EMA was while this was structured here. So the 10 EMA is at 1425. I'd want to have it below that. Like, that's so close. I'd probably say, you know what? Let me put my stop at 1425, and it'll catch up very rapidly. So that gives me a stop of 6.5%. Okay, fine. That's still doable. Price breaks out, and what's the next step in our plan? What's the next step in our plan? Well, we've got our entry. Well, we've got our stop loss. Well, what else do we set up before we even place the orders? Shout it out. Shout it out. Well, what are the three things that you have? You have your entry point. You have your stop loss. What other thing are you looking at before you place a trade?
Your target?
Yes, very good. You're looking at your targets. You're looking at where are you going to scale out of this thing. So we could like go and find the exact targets on this. You know what? Why don't we just try that? Let's see. We could maybe take a fib extension level from back. That might be a little bit too much. Maybe from right here, because you probably have a lot of people looking at this right here as a cup with handle, right? Because it started to pop out over here, and then you get this move, and then there's the handle right there. And let's make this a different color. Right? Make that in blue. So you have fractal patterns working in there as well. So if you're looking at this for a move of about 20%, so maybe it's around $18 and change. Probably have some confluence with the Fibonacci extension as well. Actually, no, you don't. Yeah, that would have only put it at about 15%. So let's just say you were using $19 as your target. But even if you're using $19, if you're using $20, if you're using $17, whatever it is, you're still going to have multiple scale outs along the way. And you're going to plan those ahead of time too. And if you're anything like me, your scale outs are going to be multiples of your risk. They're going to be R multiples. So what I like to do is to have the R multiple be relative to what my average gain is. And so in looking at what my average gains have been, and what my average high watermarks have been, I tightened it up to where I'm taking my first scale out at 4.5% and my second scale out at 9%. Slightly tighter than what I would normally do. Normally I do them at 5 and 10, so just tighten it up very, very slightly. And so on this trade, I would have hit my first and my second scale out by day 2, right? And then the third scale out that I'm looking for, right? So first and second scale out, I'm out of half of the trade. By the third scale out, the third scale out is the high watermark. And for me, the high watermark has been 15%. So that's roughly about as high as most trades go before they start retracing and getting me out some other way, whether they're hitting a backstop or whether they're hitting danger signals. It's very important to have multiple ways to exit trades. So by 15%, I'm out either also on day 2, or if not, then day 3 or day 4. Certainly somewhere in here, I'm out of another half of the trade. So on this way up, I'm carrying 25% of the trade, right? So 25% of the trade is up here. And then if I were in this and I was still following that trade management, that last 25% would have been whacked with this. So let's do a bit of math and see how that would have worked. All right, so let's get a spreadsheet. Let's click this over here. And let's say that we got in, we took our first scale out at about 15.95. That's close enough to 4.5%. So 15.95. And then we take our second scale out at about 9%. At $16.63. And then we take our third scale out a bit less than that. About 17.55. Right? 17.55. So we took, so if it's me, I would have sold 10% there. I would have sold 40% here, and I would have sold another 25% here. And now I'm carrying that last 25% of the trade, and on this move, I'd be selling it at the open. And the open was $10.67. That's a brutal opening, especially so if you're somebody that was carrying a large position, and let's say you're somebody that you buy the breakout and you don't sell anything into strength. You're just gonna ride this for as long as possible, and that's what I used to do. And not only that, I used to be the guy that would not scale out at all, and I would look at something like this, that little sideways move there, and look to add on that breakout. So I'd have an even bigger position and then get walloped. That's painful. But let's say we sold at that last piece at 10.25. So let's do the math on this. So it equals this times this. And add up all of that. $15.30. So with this entry here, right? What was our entry? Our entry was $15.25. Is that right? Yeah, entry price, $15.25. So we actually would have been a little bit better than break even though price gap down 45% on the open. That you know, that actually blows my mind a bit. Like I've been doing this for a while, and I knew that it would work out, but I did not. Didn't realize that it was going to work out that well. That just saved us a what would have been a massive loss there. So it to sum it up, it's really our system, how we filter out trades, how we manage trades, how we scale out of trades, and how we take profit. The take profit strategy would have saved us a lot of pain. Instead of being down 45% on the position, and if you're somebody that, let's say you just took this and you didn't sell anything, and you had a full position, let's say that was representative of 1% of your capital, you would be down nearly 8%, a little bit more than 8% of your total capital on that one trade with that gap down. By scaling out and then just getting that last piece, you basically break even. So that's I think the way to handle it is in our trade management, and that's part of why I've adopted a strategy where I'm progressively scaling out of trades into strength, and to become more of a swing trader versus waking up to something like this. Something like that is generally far and few between. I don't see too many stocks that do this, but I'm not the trader type that would be comfortable sitting through a move like that. So I think that's part of it as well. Understanding yourself, your style, and setting expectations properly. I'm curious to hear your thoughts and how you would handle a move like this. If you agree with what I said, if you disagree with what I said, the floor is yours. Let me know what you have to say. Well, what you think. We could go around the room. I'm just going from the top over here on my list. I don't know if you have the same order of names as I do. Anthony said that he'll be in and out of the room, so the next person on the list is Stu. Stu, tell us your thoughts on this trade here.
Yeah, I actually had a look at it just when you posted earlier, just to see how my system would have held up against it. So, my system would have been much the same as yours. Would have been fine. Probably the caveat to that is I'd have had a stop in there about 17.95, and I would have had a couple of scale outs on the way as well. So, you know, my broker allows out of hour stops anyway, which is why I tend to keep them a bit further down when I'm just trailing my last half size. So I would have probably got taken out of hours, because if you go to like a 5-minute chart out of hours, you see that there's plenty of opportunity for people to get out of there if their brokerages allowed it. But if they didn't, then you're a bit stuffed. But
5 minute. So here's the 5-minute chart. So what are you telling us to? Well,
on out of hours. See that it says RTH down the bottom right.
Yeah.
Put extended trading hours. Flip it over. You'll see there's a couple of big bars come down, but there was opportunities to get out there. You always suffer slippage on them. I mean, they saved my bacon a few times. But on my last trail amount, it's always an out of hours stop that I have in place. But you need to be a good 7.5% to 10% below the current price, or else you can get whipsawed out of it by brokers setting up their positions for the day before, or the day after, and so. But yeah, but even on the 45% gap down, I would have been roughly break even. Probably a small loss.
Yeah, very
nothing devastating.
Well, with that extended hours stop, how do you find that to work? Because you do have like a bit more or less, far less liquidity during the
Yeah,
extended hours and.
you do get slippage on them. Absolutely.
Do,
And sometimes they'll get nibbled away at and things like that. But yeah, it's,
Do you do you ever find that the order will trigger in the extended hours and then during the day it'll open up and it won't be reflected in the regular session?
it's happened a few times, not often. But if there's a big tail down on, so there's some rumors or something like that, then yeah, sometimes that can happen. Which is why I say you need to be at least 7.5 to 10% away from price if you're going to use one of those. If you're not that far away, then just use your regular stop. But
Mm.
on IB or anything like that, you just tick the box. There's no magic to it, and you just click a box that says out of hours.
Yeah, that's very interesting.
Yeah.
Yeah, thanks.
But like you, it never showed up on my scans, and one look at that chart, that's not a trade I would have ever taken. There you are.
Hi, Stu. This is Sal. Just want to make sure I understand what you said. You're trained with interactive brokers, so
Yeah,
in the extended hours session, you're able to put a stop order, and when it triggers, it just becomes a market order, and you get out.
yeah,
Right? Is that
yeah, yeah. Or a buy order. It's up to you.
right?
Yeah,
Right.
you can put anything in there. They've got a little box that says OOH, which is out of hours, or out of hours trading or something like that, and you just click it, and
Yeah.
this means your stop remains active 24/7, or your whatever order it is you have in. You can set limits,
That's a nice feature. That's a nice
Yeah,
feature. TD Ameritrade unfortunately doesn't allow stop orders in the extended session. They only allow limit orders,
yeah.
which
I
is
think there's a few of the pools are still open, and especially if you're using dark pool algorithms and stuff like that, it's fine. You always
right.
get someone to take the other side.
Yeah, the
Um,
dark pools. Yeah.
but IB are more a full service brokerage rather than just a retail brokerage. So,
Yes, it seems like IB is more geared towards a true professional.
yeah, but yeah, because there's like IB. There's no free trades on IB or anything like that. So you got to
Right, you're paying for everything, right?
pay fees on everything. It's not expensive, but
Right, on a per share basis, I guess, right?
yeah, up to 10. Well, it depends. Up to $10,000, it's $1, and then there's a rising fee after that, but it's 0.002%. It's not much. But if you do an awful lot of trading, then it probably can mount up.
Okay, that's interesting.
Give you my opinion now since I'm next on the list.
Yeah, go for it, Chet.
There's a number of reasons why I wouldn't be in this trade to begin with, and the biggest one is that in this market environment, you're more likely to have gap downs because there's lower liquidity. So when you have a weaker stock, it's going to gap down a lot, like this one. So
What do you mean by weaker stock? I mean, to me, like based on the price action, it seems like it was a leader, or at least but showing leadership quality.
you have the group rank was really low, 179.
Yeah, that part's true. Sure.
That would have been the first thing right there. That would
Okay.
have told me that there's no point in even being in it.
And that's fair.
And then the composite rating, I'm always looking for a high composite rating.
Mm-hmm.
It was only, I think, 84, something like that, for it to be in only the best stocks. And just the chart itself is pretty erratic and weak looking to me, even though there's certain points where there's a lot of accumulation. There's a couple spots where there's a lot of accumulation that's only short lived.
Mm. Right. So where you one of the things that you look for, Chet, is the percent daily range, and if it's too volatile, you're staying away from it. So like this down here, the percent daily range is 5-6% per day. That's not your kind of stock to begin with.
I'm just looking at the chart itself, and it looks really erratic. I'm not seeing a nice even trend. I'm seeing a lot of jumping around.
Yeah, like back here, and as it's starting to emerge.
That
Okay.
shows me it's a weak stock.
Interesting. So, if you happen to be caught in a move like this, let's say that the other criteria are met, and you actually end up in a stock that has a major drop like this, but how would you handle it, and how is your system able to handle it?
Well, it's pretty much what you already described. I
Okay.
would have been scaling out. Like always said, I scale out 10% of my position as it moves up 10%. So hopefully I would have gotten in at a reasonable point, and I would have been mostly out of it by the time it crashed like that. So I would have been saved by the math.
Saved by the math. I love it. You just reminded me of that old TV show from the 80s, Saved by the Bell. Saved by the math. I love it. Sal, how about you?
What was the question, Mike?
Well, we're still talking about CRDO and how questions you have about it, or how you would handle this trade if you found yourself in something like this. Whether you're how you would handle this particular trade, or even if it like something like this wouldn't be on your radar. Like, what would you do if something got down?
If I were in a trade like this, I probably would have gotten out of it before this run up. You were selling out of it in portions, and you were gonna leave 25% as a runner, right? I would have gotten out of the entire position, and not held that 25%, because in the current market, which is kind of choppy and going sideways, I just kind of felt like that eventually it's just going to give out on me. I guess I'm more in a red condition, so to speak, or yellow. I don't the yellow red condition, as you guys would say. It's got to be really really green for me to kind of have a 25% position in here. I'd say, look, I made my money. Let me go find something else. That's how I would trade it.
Interesting. Well, would you ever try to hedge something like this with options, or does this not fit your option strategy?
No, because if you look at this thing from an option perspective, are you going to be a long-term trader? I mean, you're going to hold it for long term, and then look at the options, and you're like, the spreads aren't that great. There's really not much volume in the option, so you're probably going to exercise the option or buy it as insurance. And that's sunk costs, basically. You're paying an option and you're holding onto the stock, thinking it's going to explode. You could do that. I wouldn't at this point, because it's just not liquid enough for me, and the options are very expensive in CRDO. They're very expensive. They're at the 100 percentile rank. So I wouldn't want to buy an option because it'd be expensive, from my perspective.
Mm.
I would trade it like you guys are trading it, with shares, and get out of it.
All right, thanks, Sal.
Okay.
Being
Tish.
only the very best charts that are showing signs of accumulation over a long period of time. In this market environment, you don't have much room for error. So I
No,
keep
you.
bringing up that stock ELF. That's exactly the type of chart I'm looking for. Find very few of them in this market.
Right, right, and I want to take a look at Elf too, but before we move on to Elf, I'd like to get Tish's thoughts on this trade here, CRDO.
Okay, so my rules are third on 5, third on 10, and then let the rest run. And the 10 EMA would be the sell when it broke that, and that would have been the day before.
So when you say break, it just needs to breach it intraday and then see you later.
That's what the way the market is right now. You just don't know. And that would have been a really good run at that point. I think I'd be like, it's like, are you taking your chances here?
Hmm. Yeah, let's see. Does it?
You did have some warning the day before.
Well, here it briefly undercut the 10 EMA on that day. Let's see. There, it seems like there's a few days where it touches it. Like here, the low of day was 1804, and that's also where the 10 EMA was. There, it's hovering above it. Here, it's just above it. There, it's also just above it. What about this? That looks like a breach. Yeah, it actually breached slightly on this day here. So on February 1st, the 10 EMA was at 1671, and the low of day was at 1669. Would this day here have taken you out, Tish, or not yet?
Oh, yeah, that would have taken me out. Yep. Yeah, I was
Okay.
going back and looking at the different days, and I missed that one. I kept looking at the 21 instead of the 10.
Hmm.
Yeah. And that would have been a nice run.
Yeah, it would have been. It certainly would have been. You would have had your scale outs, and you would have taken that would have been about 8% on or 9% on your last one there. That's great. Just wash, rinse, and repeat. So long as you're keeping your average gain is bigger than your average loss, and ideally your average gain is twice the size of your average loss, then you're doing very well.
But then I wouldn't have been out yet because I hadn't had my 10%. So I wouldn't have been pulling. I wouldn't have been pulling at that point.
Oh, but so on day one, actually on day two, it hit 15% gain.
Oh, did it? Okay.
Yeah, so
Since
so
I
that
didn't do it, I'm not like familiar with it.
I see. Yeah, so you would have gotten your scale outs by day two, and then that last piece that you're trailing with the 10 would have violated your rule on the first. Like it just undercut it by like 2 cents.
Right. Okay.
And it's days like that where I used to have rules and start second guessing myself because I'd see something get undercut by a couple of cents and then take off and run without me. Like at that point, it would have been up another 15-16% without me, and I'd be sitting there kicking myself. But that's really where so much of our testing, our journaling, our back testing all comes into play, because when we start doing that and we start doing that regularly, that's where we have all the hard evidence that tells us, hey, we have these rules, and by doing the post-analysis regularly and journaling regularly, it all reinforces all of the rules, where we can see again and again how the rules play out and how they play out, and that we might get an extra couple of percent on a few trades, but there'll be plenty of times where we get saved by our rules. That's why we have the rules, and sometimes it saves us in a big way, like when something like this happens. So, very glad to hear that none of us were caught in this, and if any of us were caught in a trade like this, because it might not be this trade in CRDO, but something else is coming, and a scenario like that will happen. And I'm very happy to hear that we're all very well prepared for when that does, and that will be, as Chet said, saved by the math. So let's take a look at that other trader in Elf that Chet brought up. Yeah, here's Elf. Elf off delivering a Christmas present for shareholders. So,
How about this chart says accumulation, other than maybe, I don't know, the bottom part might seem like it's a little bit light, but it's just the steady trend of it and just the way that it's constantly moving up. This is the type of chart I'm looking at.
Yeah, this part over here might be a little light relative to that huge gap up, but I guess it can't go up every day on huge volume, right?
Not in this market.
And so here's where volume was yesterday. I'll just leave my mouse there so that way you could look to the left and look at that dotted horizontal line. The volume yesterday, when it made the new high, is still higher than many of the other days. I think that it's below the average volume because of the earnings spikes, and this dip over here. That's what's driving the 50-day average volume. But for the most part, this volume is about the average that it's had, and even a bit larger than some of the volume in here, and certainly some of the volume in there while it was consolidating.
Yeah, you're seeing slow, steady accumulation over a long period of time. That's what I look at.
Yeah, it's looking good. Good for comparison. Thank you for bringing this one up. So what other thoughts or questions or comments do we have about this, about something else? What do you want to talk about?
I was going to do a quick run through for Sal of the how to tell intraday whether you're up or down kind of thing.
Sure.
Quick bit of the strat thing. If you want me to share my screen, I can quickly.
Yeah, absolutely. Yeah, let me.
No.
Yeah, it's great, Stu. Thank you.
Yeah. Let me do a screen share.
Yeah, I stopped sharing mine, so you could all hop on over to your screen when you're ready.
Yeah, I'm just going to go for 15 was the frame rate, wasn't it? Hopefully you can see that.
Yep.
So what I'll show you how to do it. We'll go to that's NASDAQ that I've been trading, but SPY. I'll just clear all my annotations. Remove indicate it. I'm drawing so that's not on. So the way that I was shown how to do it was if you go to a monthly chart and you bring up the previous month, and then you draw the previous month, which is January. We go at we put in a monthly level at the bottom and the top. This will all become apparent when I'm doing this in a sec. Then we go weekly, and we put in the previous week. So that's this week here, previous week. That'll be a weekly level. I have mine all marked, but I know you use a slightly different charting tool. And then what you do is you look at the daily as well. So you put your daily previous day. You put 3 indicators on, or 3 lines on it, and essentially these are just drawing support and resistance. But we'll put that on the daily. Where's the daily one? There it is. And then you have a thing called a bull and a bear line, which is halfway up the previous day's bar. So if you did this at the end of each day, you only have to do the monthly at the end of every month, weekly at the end of each week, and then obviously the daily one's the one that moves all the time. And then you stick a bull bear line halfway up that bar. I just eyeball it, but you could be more scientific. So if I then go down, and when you start looking at this on an intraday basis, so if you were looking at it on a 15-minute chart, say, zoom out to that. I'll take these extended hours off. So if you zoom into that, so if we're above the bull bear line, you're looking at going long, and if you're below it, you're going short. Now, these daily lines, we've not picked the greatest time. We can maybe go back a week or something on a real trending day. But essentially, if you're in here somewhere, you're looking for a reaction somewhere around this bullish, bearish line. And you're looking for reactions around about the previous day's high and low. So this is today, started at 4:30. So we were bearish at the start of the day, then it came up. We'd be looking to be bullish at that point. And we're looking for reactions, and we get reactions around this line. You can see how it's, and then as it came up here, then that would maybe be an entry point there, and you would ride that one up. Or if this one here, it poked up above, so as it comes through there, that's confirming your bullish bias, you would go up. Bearish, you're not getting much traction there. But that's essentially in a nutshell in how you trade that. If you went to a 5-minute, you maybe see it a bit clearer, that you get a lot of action around those kind of lines. So it's something that it's worth playing with, I think, Sal, when you go back to it. But essentially, when you get the confluence of lines, when you get up to like the kind of weekly lines, if they break down, then you get strong trend and going the other way and so on. This here, for instance, you've got a monthly support level, and you've also got a previous day support level. If you'd come down to here, you'd expect a reaction here, something significant. So then you can go, and it also starts to give you your targets that you see the market sort of aiming for. So if this really took off down here, you would be looking for it. That would be target 1, target 2, target 3, or whatever. So does that help at all?
Yeah, it's very helpful. I was looking more granular in determining whether within the first 15 minutes of the session, if you're in a range day versus a trend day.
Yeah, you would.
And I don't know. I mean, look at today. Fortunate for me, for the first 2 hours, I was doing something else, but I just look at the way it behaved. If you look at the ES or the SPYs today, the first 2 hours, a lot of volatility up and down. It looked like from the beginning of the session. I'm trying to see.
Yeah, but even at that, the first is a lot of volatility. It's jumping up and down, but it's not actually showing any clear direction. So it's maybe a bit of a stay away day.
It's
Really,
Exactly. Yeah. And I was fortunate that I was away, but I asked myself if I wasn't, would I have gotten caught in the muck?
Yeah, I mean, if we look at a daily chart, try and go back to what a day that's sort of trending or whatever. So, this day here. So this would be, if you click that down there, right, 1, 2, put that one in there. I'll ignore all the other ones. But then if we zoom in on that on a time to wherever it is, okay, so you can see when it actually breaks out of that. We've
Right.
kind of lost the days, but
It's
when it
breaking
breaks,
out.
you
It's
get
breaking
a
out of the daily high, right?
you've got a 15-minute bar there that's taken out the daily, the monthly.
Okay.
So that's a strong trending day, and you want to get in there, on that. I mean, it started from a way down here, so it was kind of going up, but you potentially you expect something to happen around here, which it does. It pauses. You expect something to happen at that high, which it does. It reverses. It goes back down to the mid, and then it finally takes direction. So, but as I say, I mean, you're just drawing lines on the chart essentially.
Right.
Yeah, and it's really just the daily and the weekly and the monthly if you want to play that, because there's
Right.
significant levels within those kind of indexes,
Right. I've been putting in lines where during daily and intraday, like hourly areas of support and resistance, and along the way. But I haven't done the high low. That's a nice approach. High low for the day, and then high low for the week, high low for the month
Yeah,
to see.
and you find that bull bear line in the middle of the day. It uncannily, I don't know why, but it just seems to be a magnet, you know, until there's a clear breakout, So.
Okay.
And you will get days where it opens and it's just opens just under the previous daily high kind of thing, and it takes off. So you buy the break of the first bar, If that was a 5-minute bar you were looking at, then we're back to today again, aren't we? But you just buy it and go. Anyway, that was it for me, Mike. That was just because we promised I would do that last week.
Thanks, Stu. I really appreciate it.
Yeah, that was fantastic, and that's actually very similar to how I would day trade when I was looking at the different support and resistance levels. I was doing it more so on leading stocks and stocks that were had already broken out and were making some moves, looking at daily ranges, looking at weekly ranges, and trying to see, well, where are the important levels, and I think you did a great job with what you have here. And that bull bear line is something that I was not looking at, but it definitely looks very useful. Like even the way that you have this chart up right here, where price came down to that 12,500 level
Yeah.
right around there, and got some support, and then bounced from it multiple times.
Yeah, it fascinates me how it just kind of it works. But there's obviously people use pivot lines and all these things, but they just seem to be um, natural lines that they pick, and it's I don't know top bottom in the middle of yesterday's daily bar. It just seems to be it works more times than it doesn't. So there you go.
Yeah, simple works.
It does. Anyway, I'll pass back over to you, Mike. I'll stop sharing my screen.
All right. Thank you, Stu. Now, go back to sharing mine here. All right, so what other questions are there in the last few minutes that we have for today? Yeah, time flies when you're having fun. We're almost up for the hour. No questions. Everybody's a happy customer. It's been a lot of stocks that have been passing screens lately. It's been so many setups as prices just kind of consolidating around here on the indexes and starting to turn up a little bit more over here. Yeah, let's. And now I'm curious. Now I've made my own question. I'm curious. What percentage of stocks for the week are up right now? And well, when I say that, I mean percentage of stocks from the trade ideas list. So I'll go to the trade ideas list, just scroll to the bottom. And right now there's 50 of the, what was it, 63 ideas on the week. Yeah, 63. So equals 50 divided by the 63. We're back to 79%. So the majority of stocks have moved up for the week, which is great to see. And to see more stocks setting up in quality and working is constructive. Very constructive. But to Chet's point from earlier and from seeing some stocks still blowing up like this, well, we still want to make sure that we're taking the highest quality trades, that we don't get sloppy, that we're sticking to process. And if we are scaling up, that we're scaling up on the heels of winning trades. Taking profits that we've made and recycling those profits. If you haven't made much progress yet, then trading small is still the way to do it until you have progress. That way you don't find yourself in a hole, and then for the unfortunate people that were caught in this, you end up digging out of a much bigger hole. All right, so I'm going to run my scans and set up the trade plans for the rest of the day tomorrow. I've already updated a bit in here in the open trades log. You can see how stops have been moved up so far. And I'll have the focus list and an updated action list ready for you later this evening. Yeah, unless if there's any last minute questions, I think that's it.
I don't
Great.
think so. I just sorry, Sal, or whoever it
I was
was.
just saying thanks to Mike. Great session today.
You're welcome. I'm glad you enjoyed it and got something out of it.
Yeah, I was just going to say it's good advice, Mike. Just compound your gains, all that kind of stuff. Mate, I was doing my P&L curve a bit earlier today, and it's only recent. It was only the last 2 weeks it started to compound into the in some decent sort of growth, really. The whole of January was underwater until the 29th of January. But it's only getting those gains and then scaling up as you get them, and it actually boosts you. So you can always go through that Saturday or something if you want.
Yeah, I think that would be great. All right, folks. So we've got our session on Saturday, 10 a.m. Until then, I'll talk to you in the chat. Hit Stu or I up if you have questions or each other too. This is a great group, extremely supportive of one another. I'll see you all during the week. See you tomorrow.
Thanks. Great session. Thank you.
Hey, bye.
Bye, all.
All right, see you guys. Take care.